Okay, hi, I'm Crypto Jack. How's it going? I am streaming on Twitch 3 times a week, and I love to have people come and ask any questions, and I like to engage with them. And a lot of the questions that I've been getting lately are very kind of beginner focused, explain like I'm five kind of deal. So I thought I'd take a moment to go through and answer some of the very, very basic questions that I've been getting. And we're going to start kind of small and then try to build on that in a way where coming away from this video or this discussion, you can have a conversation with somebody and know what you're talking about what is Bitcoin and why it is so relevant and why people are talking about it in the news and what's happening with the value and halvings and on and on and on. So we will hopefully cover a lot of that to where you can hold your own in a conversation. So first off, what is Bitcoin? Maybe your mom, your grandma, maybe you know, whoever's watching this right now, maybe you ask, what is Bitcoin? One of the very simplest things that people miss is it's not an actual physical thing. It's not a actual physical coin. It is all virtual. And the easiest way that I've found to explain what this is it's like, think of an Excel sheet or spreadsheet or something like that, where there's a list of who owns what Bitcoins in the wild. Now there can only ever be 21 million, and we'll kind of get into some of that stuff later. But for now, let's imagine that you have 10 Bitcoin and I have 1 and someone else has 2 or 3 or whatever. And in this spreadsheet, it has everyone's names and what they own, okay? And anytime you want to send Bitcoin to someone else, that spreadsheet is updated. It's the same thing as me going into my Microsoft Excel and changing the 1 to a 10 or something and hitting enter. But here's the rub. With Bitcoin, anytime you make any change to that spreadsheet, you must inject work. You must input work. It takes energy. There is a cost to changing that spreadsheet. And that cost is, this is where the miners come in. This is why people buy computers with very powerful processors, very powerful graphics processors, GPUs, and even specialized units that aren't quite GPUs. There's some kind of Frankenstein that people made just to mine Bitcoin only. And then they buy not just 1 or 2, but entire warehouses full. So the cost of all those things, that has a tangible value to it. And that cost is measured usually best through what's called the hash rate. And the hash rate is just kind of a collective number of how many computers across the world are all on the Bitcoin network working as one. And what I have in front of me now on this screen right here is the price history of Bitcoin. And the hash rate is actually not much different than this, but let's just look at what's happened in Bitcoin's short history. So Bitcoin actually came out in 2009, and it predates this chart. Now, during this time, it was really just traded for whatever people kind of said, well, it cost me 10 cents or whatever to generate that, to mine that with my computer. So I'll trade this Bitcoin to you for 10 cents. And that's kind of how people were like, oh, okay, well, that seems like a reasonable way to value it. Okay, sure. So in the early days, it was like the electricity costs of the work that the computer did. And that's what each Bitcoin was worth. So people in the early days, they could have bought Bitcoin for 10 cents or less. And now over the 10-year history, we're all the way up to, where we're very excited to be. Anyone who's a fan of Bitcoin, we're up to 35,000 and above. Like today it hit 36,000. So very exciting times. Now what's interesting, a lot of people also say, well, I want to buy a Bitcoin, but look, I've missed it. I've missed the boat. It's $36,000. So a lot of people actually don't know this too. So this is something you can even help, like I said, your grandparents, whoever, understand this, is that because this is a digital asset, it can be divided into 100 million pieces. Okay, so you don't have to buy 1 Bitcoin. You can actually buy a fraction of a Bitcoin. You can buy 0.0000001 pieces of a Bitcoin. So 7 zeros. You can cut it very, very, very small. So you do not have to own an entire coin. So I just wanted to make that point. A lot of people miss that. Now, we were talking about the work that it takes. The work that a computer takes. I want to kind of explain mining, because the mining element of Bitcoin is actually, one, why it is the most secure crypto asset of all crypto. There's 8,500 different crypto coins out there. Bitcoin was the, not even the very first, but it is the third or fourth, or I forget what at this point, but it is the most important of all of them. It is the king. And you have to understand this before you start even considering entering other assets. Other assets do have their pros and cons. Some might even outgain as far as value. They may even appreciate in value faster than Bitcoin, but they will not outlast it. So nothing has a 10-year history and has the kind of logarithmic growth, exponential logarithmic growth that Bitcoin has. So anytime, if you think you've missed the boat here, just imagine everyone who even looked at Bitcoin, no matter what the value was, they looked at it in different lenses and they thought, oh, I missed the boat. It's $500. And then later, oh, I missed the boat. It's $8,000. And here we are today with you or whoever saying, oh, look, I probably missed the boat. It's $35,000. But 10 years of history would tell you, you probably didn't miss the boat. So, but I wanted to talk about the mining element because, like I said, the work side of this is one of the most fascinating things. So miners, whenever they do their work, the work that they do, that they have their systems do, it's like solving a very complex Sudoku puzzle. And if they are the first to solve it, which is why this is turned kind of into an arms race, because it's all about who's first to solve this puzzle. If you're the first to solve it, you get rewarded in two ways. You get a block subsidy, which is the fancy way of saying like a little bonus. And then you're also paid the fees from everyone who wanted to move money from A to B. So let me explain this visually because some people are visual learners. Let's say that I want to send, hold on, let me get like a blank space. Okay, let's say that I want to send, so here's Jack, and I want to send 1 Bitcoin to Pantauga. All right, and then let's also say Tex Army, who's one of our mods, just like Pantauga. Let's say Tex Army wants to send 1 Bitcoin to Itani. And then let's say I scammed Itani and he wants to send 5 Bitcoin to me. Okay, all these things, these are all individual transactions. So for this to happen, all of these things, we have the amount that's being transferred from person A to person B, but then as a part of this, there's a little fee carved out in every one of these. I'm trying to write an F, like freehand write an F with this little trading view software, but you get it. So there's a little fee. So this and all the other transactions like this would be a block. And here's your block. This is a block of transactions. So the blockchain started with the genesis of Bitcoin when it was very first started. We're going to say the genesis. And then from then on, every time people sent transactions from one person to the next, the first computer to solve the puzzle, which there's a very complex Sudoku puzzle, that's the easiest way to think about it. The first one to solve it, they propagate their results, which just means they tell all the other computers, hey, I solved it, and everyone kind of verifies it, and they go, oh crap, he did get it. All right. That block is now so we have the Genesis block and then the very first block beyond that. And then we have a chain of them, and you cannot add a new series of transactions, all these transactions, without the blocks before them being added into the sequence. So you can't pull a quick one and suddenly send, lots of different, like Itani couldn't send 5 to me and 100 back to himself and somehow trick the network. Like Bitcoin is built in a way where it cannot be tricked. So it's just easiest to think of that. There are things called like 51% attacks, but for this, keeping in mind this is like an explain like I'm 5 kind of segment, we'll just keep it simple and say that it is designed in a way to where it cannot be tricked. So we have our blocks added, and this just goes on forever. So you can even look up what is the current block, and it's 600,400 whatever, it's some number, and that just means there are this many blocks in the chain going all the way back to the genesis of Bitcoin. Okay, and then we are brought to the current times where at some whatever today's block is. You can Google it. depending on when you're watching this show. So hopefully that explains kind of what is happening. Now, anytime the miners solve the puzzle, right? I was saying before that they are essentially like, imagine somebody with a blowtorch is fusing this link from the whole chain before it, and then they're adding these new transactions, like all these. So they're fusing that chain to where this is, for the rest of history, this is a very public statement of who got what. And then with that, the Excel sheet, the big master Excel sheet, again, this is just the easiest way to think of Bitcoin. It is now updated with all the new values based on what everybody did within this thing, okay? And then the miner who did it, the miner gets his fees, right? So there's like the little fees are carved out. So the miner gets rewarded, and he also gets a reward, a little bonus. And he doesn't get the bonus forever, but for now he does get a bonus. So that bonus is actually called the block subsidy, and it cuts in half every 4 years. Okay, and so this leads us into another segment where people say, well, is Bitcoin going to crash? Or another way, what they're really asking is, why does it tend to just go to the moon and then crash down, and go to the moon and crash down? And so this is, if you come to my stream, and I am twitch.tv/cryptojack, and the O is the number O. I stream 3 times a week, and we like having these kind of conversations. If you need more of a visual than what I'm giving you here, or if you need to ask the question in a different way. But here is my best attempt at explaining this with the information we have right here. So let me clear this off. Okay, actually, I'm going to leave that just for the block segment. Okay, so the Bitcoin, there is a block, right? We just talked about our blocks. There's a block roughly every 10 minutes. And the beauty and kind of the masterful stroke built into Bitcoin is how we talked about the Sudoku puzzle. That is very difficult, and the first computer to solve it gets the rewards, right? Well, that puzzle can actually be ramped up or down in difficulty. So imagine you have like a shelf of books, and you can pick the child Sudoku, which is like, very big print, and there's very simplified, and it's pretty much all filled in except for a couple numbers. And then there's like the elite mastered super Sudoku guy, where it's like, oh, there's only one number filled in, and it's like super complex, and it's actually 3D, and you have to bleed into like other planes of existence. And so like, whoa. That's kind of what happens as the hash rate rises. So things as they get harder and harder and harder, that's what happens. So in the early days, we had the like 5-year-old version, okay? And in these versions, every 10 minutes, which these blocks are made so that they occur roughly every 10 minutes. Every 10 minutes, somebody got 50 Bitcoin as the bonus. So not just did they get the fees, but they also got the bonus too. So during this period of time, which I've tried to denote with these orange vertical lines, the periods of time where people got various the block rewards, like, because they change. So every 4 years, they will cut in half. And so you might hear in the news or whatever, people talk about the halving or the halvening. People kind of argue the way to say it. But the halving is, from 2009, when Bitcoin first started, to about 4 years into the future, every 10 minutes, a miner got 50 Bitcoin for the work that they did, on top of the fees that are built into these little trades. So somebody stacked a whole lot of Bitcoin if they held on to it way back in the day. And then on a certain date, and this is built into the Bitcoin code. It doesn't need anyone to approve it. It doesn't need anyone to say yes or no or whatever. It just happens. After a certain period of time, now the miners only got, from this period to this period, they only got 25 Bitcoin per 10 minutes or per block. And then once again in 2016, it got cut in half again, and they only got 12 and a half Bitcoin per block. And now we're in a period, or an epoch as people call it. We're in a new epoch where the miners only get 6.25 Bitcoin, 6.25. That's it. So, and this will continue out into, forever, where every 4 years, it'll keep cutting in half. Now, when you understand this and you look at this and you look at the price action over this period of time, what you start to realize is, oh, well, when there's a halving, the supply is cut in half of these block rewards are the only way for Bitcoin to enter the Bitcoin ecosystem. It's the only way for them to come into existence. It is from the miners' work, okay? So if the supply cuts in half from 50 to 25, what's going to happen? Well, the market is the demand was at a certain level before the halving. And so now that demand hasn't changed, or even perhaps it's increased because of news events or coverage or whatever. But if the demand is the same or greater and the supply is less, then what you have is very simple to expect or anticipate. It's a rise in value. And then once again, you have this kind of blow off top with this sideways period. And then once again, you have another halving, and you have a big blow off top with the sideways period. And then once again, you have the halving and a blow off top. So once you see this time and time again, you get used to it. You say, a halving equals a bull run. And that is how you should view these things. So every time there's a halving, every 4 years, the next one, or what's important is the last one was very recent. It was in May of 2020. So if we look at the last one, for example, which occurred in July of 2016, about 18 months later, we topped out at our subsequent bull run. So if we are in roughly the same period of 2020, then say Christmas or just before of 2021 would be our anticipated top. So if people say, will Bitcoin crash again? Yes, it absolutely will. It absolutely will crash again, because this is how price discovery and price exploration works. Now, it's not going to crash down to like $1 or less, but it will crash in the sense of maybe we see $100,000 to $200,000 and then it pulls back, just like it has multiple times, where there's a period of downtrend called, like, where people will call that a bear market, or a period of sideways, which they say this is consolidation. The way I like to look at Bitcoin is you're in one of three phases at all times. You're in a bull run, you're in a bear market, or you're in just straight sideways consolidation. You're in a bull run, you're in a bear market, or you're in sideways consolidation. You're in one of those three. And that's how I view things. So if we had to pick where we are today, it's in the bull run. We're in the bull run. No question about it. And once you start understanding this, it kind of changes how you look at Bitcoin and even money, frankly. Once you start really understanding Bitcoin, your view of your dollar or your euro or your yen or whatever it is that you use on a daily basis, it will change how you view it, and probably not for the better. Because the sad reality is you start realizing, well, what if Bitcoin's not worth $38,000, but what if the dollar is just worth less than it was 10 years ago? You know, what if I thought Bitcoin was changing in value, but what if that's just the constant and really the dollars are becoming less and less valuable, right? So you start having those conversations, and I welcome you to explore that. No, and there's nothing I can say in one quick, brief 2-minute segment to explain that. But that is what I stream and discuss, and we look at all kinds of information like the DXY, the dollar versus its competitors globally, and all kinds of stuff. I won't bore you with it, but just understand that maybe the dollar's not exactly what you thought it was. And if you have money in your savings account not earning interest to, say, offset inflation or whatever events might be harming the dollar right now, then you should probably consider Bitcoin or something like Bitcoin, like gold, or as a hedge, because you're losing a lot of purchasing power. All right, so I have some notes. Let me just make sure that I've covered a bunch of these. Mining, etc. Excel sheet. Yeah, okay, so there we go. 3 notes worth of introduction. So I think that's going to conclude my beginner's tutorial on Bitcoin. And I invite you all to come visit our stream. Again, it's twitch.tv/cryptojack. The O is the number O. I stream 3 times a week, and we have a great community who can help even the earliest of beginners. Oh, the last thing, because I have a lot of people ask me this. This will be the last thing, is people say, how can I buy Bitcoin? One of the hardest concepts for people to understand is, how do I go from not owning a Bitcoin to owning a Bitcoin? And this could be a discussion that lasts for hours. So I'm going to try to very briefly summarize this. For starters, you own your dollars or whatever, your fiat currency, whatever your currency of your country uses. Okay, and you're trying to get to Bitcoin. You must have a ramp. They call it, just kind of in layman's terms, an on-ramp. So you need to find an on-ramp. You can Google a crypto exchange or a Bitcoin exchange. You'll probably get a whole lot of options. Some of the biggest names out there are Binance, Coinbase, KuCoin. There's a dozen of them out there. Gemini. There's all kinds. Now, some of these exchanges will only let you use them if you're from a country. Like, some exchanges will only let Americans use them. Other exchanges will let anyone but Americans use them. So be smart, do your research, check that kind of stuff out. Don't just blindly jump into it and send them money. Now, the other thing to remember is, when you own Bitcoin, there's 2 ways to have ownership of your Bitcoin. Either you own it, which means you have it in your possession and you fully understand what goes into that. That's an entirely different discussion. Google that, do all your research. Option B is, you trust a centralized exchange. So the guy that you go to click buy through an exchange, for example, if you choose to go that route, understand that just because you clicked buy and it says you now own 1 Bitcoin on the screen, they are in control of that Bitcoin. So if the government calls up and says, hey, you know what, Bitcoin's kind of a threat to our currency, hold any Bitcoins you have on the exchange, or we're gonna arrest you with our FBI SWAT team or whatever, then hey, tough luck, buddy. You just lost that Bitcoin. So you've got to understand self-custody. So I'm giving you like key phrases, whoever's viewing this right now, to go and Google and kind of teach yourself this kind of stuff. It's nothing that I can just tell you immediately. Bitcoin it's more of a journey than it is a topic that I can just explain quickly. But hopefully through the discussion we've just had, that will be enough for you to give you some threads to pull at and some things to go and Google, and that will eventually lead you to where you can be you can competently self-custody your Bitcoin and understand what's going on and know how to view the market. So anyway, again, I'm Crypto Jack. Love to talk to you more. Come swing by the community, and yeah, we'll see you around. Thank you.